I think the biggest blind spot in the battery material supply chain is actually rare earth elements. If shortages appear in the not too distant future, which we're projecting they will, and if those impact the auto industry, then that's going to have a ripple effect on the battery side of things.
Welcome back to Rockstock Channel, and thanks for checking in. Before we launch into the interview, we'd like to thank all our Patreon sponsors. And for those of you who are new, share a bit about us. RK Equity is an advisory firm run by Rodney Hooper and me, Howard Klein. We are exclusively focused on raising awareness about companies producing or developing the next generation critical raw materials that are powering Tesla's EV battery energy transition. Please register your email at rkequity.com and follow Rodney and me on LinkedIn and Twitter. Please also subscribe to this channel, Rockstock Channel on YouTube, as well as Lithium Ion Rocks on SoundCloud for our podcasts. Please note, Rodney and me are not financial advisors or broker-dealers. Nothing you hear in this video is investment advice. Please do your own research and read the disclaimer at the end of this video or on our website. Thanks again for the support, and let's get into the video.
It is Friday, October 8th, and we are here with Ryan Castilloux, who I guess heads up Adamas Intelligence. But when MP Materials last year went public via SPAC, I had some SPAC experience, I had some knowledge of this this project and this company going public. You were very helpful in giving me background research for a note I wrote about MP Materials. Thank you very much for all of that work. But I came to know you during that you indicated you do much more than rare earths, and we've been seeing more and more you're commenting on lithium and nickel and hydroxide and carbonate and et cetera. So why don't, before we get into this conversation, and part of the reason for this conversation is that you have an upcoming conference on October, was it 19th and 20th? There's a rare earth day on the 19th, and then there's a battery materials day on the 20th. Rodney and I are speaking at that conference, and it's a 100% North America focused conference, and it's free to everyone who's watching this. Please bear that in mind. If you find this interesting, register.
Thanks for having me, gentlemen. It's a pleasure to be here speaking with you. Adamas Intelligence is an independent research and advisory company that I founded in 2012 to help clients make informed decisions involving strategic metals and materials. Our initial focus was, as you said, on the rare earth market. And in covering that space, we've long covered the EV market from its infancy, which at that time was really all about hybrids. Toyota Priuses, things of that nature. So as you're likely aware, hybrid electric vehicles use nickel metal hydride batteries, at least the majority of them do, which have rare earths, contain rare earths in their anodes. So that was an important part of our coverage. As that market has evolved to become more and more dominated by battery electric vehicles and plug-in hybrid electric vehicles, it was a natural fit for us to switch over and start covering that growing bouquet of battery metals and materials on the lithium ion side. So in 2018, we launched a suite of different battery and EV focused products that cover our legacy coverage, obviously, in hybrids and rare earths, but also incorporate this growing side of the market that is battery electric and plug-in hybrid electric vehicles. I'm based in the Toronto area, close to my hometown of Sudbury, Ontario, which is a major nickel mining camp.
That's great. And you're a geologist, as far as I recall, right? Some of our chats, you were telling me all about, the Sudbury nickel mines, and there are some companies like Frontier Lithium and Talon Metals, at the upcoming conference that are adjacent to or in that region. There was news on the tape earlier this week that GM is partnering with GE to collaborate on supply chain considerations focused on rare earths, copper, and e-steel. So I was a little bit surprised when I saw the copper and the e-steel, not so much surprised in the rare earths, surprised that kind of like lithium and nickel wasn't mentioned in there. But I guess from a rare earths perspective, what do you make of that?
Not entirely surprising to see companies starting to react, starting to look at how they can move upstream and back integrate to address some of those upcoming issues. The magnet gap is one that is obvious to anybody that, just does a back of the envelope look forward. The companies themselves, a little bit surprised to see them as the first movers in the space, given that they're not entirely the greatest consumers of rare earth permanent magnets today, but they do have involvement in the business. So GE is obviously involved in the wind turbine business. It's involved in the medical business, many others where it's using rare earth magnets. GM, obviously a lot of growth in its pipeline if its aspirations do come true, which will mean more and more demand for magnets. So great to see that it's thinking ahead and that it's acting on these issues. But yeah, we're going to need to see other companies following suit. We're going to need to see the Teslas, the VWs, the anybody else that's using permanent magnet motors also addressing these issues proactively, because we're quickly walking into a situation where there won't be enough to go around. And the main suppliers of the world, aka China, will need to make hard choices on whether it satisfies its own demand or continues to export to others that also want those magnets.
We're going to start, Rodney and I are much more, involved on the battery materials side. So we're going to go in reverse order of your conference and start with the October 20th Battery Metals Day, which starts, I guess, at 11, and ends, around 4:30. And I'm calling up the agenda here. Half the day is lithium, and then there's nickel cobalt recycling. And Rodney and I are going to be speaking, from 2:20 to 2:30 with some of our updated thoughts. So we got Lithium Americas, starting off, then Piedmont, Critical Elements in Quebec, E3 Metals, a DLE story in Alberta, Frontier, I mentioned earlier, in Ontario, Jindalee, clay opportunity in Nevada, and then Compass Minerals in the Salt Lake, the Great Salt Lake of Utah, and then Talon Metals, in Minnesota. Nickel story, SPC Nickel, First Cobalt, we know Trent Mell, also in Ontario, Li-Cycle, we were talking about recycling being big, and Lithium.
The chosen chemistries for EV models set in stone until the model cycle ends, or are you seeing shorter-term chemistry changes like what we've seen with the Tesla Model 3 short range, where they've flip to LFP?
Yeah, absolutely. We continue to see that, and that's likely to be, accelerated going forward, as the future beggars of the industries don't have the luxury to become choosers in a market that's, demand is overwhelming supply. So I think a textbook example of where we see these intergenerational changes within models is the Hongguang Mini, which is that small A series urban EV. That's really taken off in China. So at present, there's over 20 different model versions of that vehicle being produced in China. And every few months, the universe of suppliers for those 20 different models tends to change. So we have models that have different sizes of LFP packs, different sizes of ternary packs, a long list of different suppliers on the cell side, on the motor side. So I think that's a great example of where things are going with EVs that become extremely popular, extremely fast, and the producers don't have that luxury of sticking with a single supplier or just a couple of suppliers.
Once you factored in, the rejected cells and so on, do you track the lithium intensity per kilowatt hour by chemistry? So do you look at, actually what is closer to the sort of actual amount that's required in order to get to the finished product rather than, say, a theoretical number?
What we track through our services is generally the material that's going into cells, that's going onto roads. When we start to move further upstream, at present, if we look at the cell yields of some of the major producers of CATL, that's the leading producer, depending on which month you're looking at, we can take that lithium amount that is in a cell and increase that by almost 50% once factoring in the cell yields in terms of a demand increase. As we move further upstream towards the mine mouth, we're looking at another perhaps 30% increase. So that takes us collectively, when you compound those two losses, to an area, roughly speaking, where we need twice as much lithium at the mine mouth as will end up in the cell going onto roads. Obviously, that ignores a universe where recyclers exist that will refeed some of that or the majority of that material back in. But it's just a good metric, a good rule of thumb to kind of hang your hat on in considering the space.
So that actually is quite high then. It's actually probably slightly higher than where I'm at in my estimates. So are there particular chemistries that are sort of culprits that have lower yields that are, it looks as if as new chemistries come in, they're a little trickier. So you're getting more rejected cells at that level.
Yeah, certainly. So I think, again, to circle back to CATL, that is that largest producer on any given month, but is also the dominant producer of 8 series, of 811 and other 8+ varieties of NCM. Its cell yields just over 50% in 2020, which I think speaks to 2 things. It speaks to the fact that it's in the progress of ramping up output on multiple fronts, which leads to lower yields. A second factor is that it's producing chemistries that are inherently more challenging and come with lower yields. So that certainly speaks to challenges in that area. And where we see that reflected in the data, more and more as time is going on, is in the kind of stronghold popularity of the medium nickel cathode chemistries, the NCM 5, 6, and 7 series, where yields are lower, where the precursors are generally a little bit easier to work with. So that's leading to cost savings overall that make those chemistries quite popular. And another area is that there's kind of evolution happening within some of those cathode families. So CATL, again, for example, it's taken the traditional 5 series, the 523 NCM, bumped up nickel to 55% at the expense of cobalt. And in combination with cell to pack, it now has pack energy densities in the order of 170 to 180 watt hours per kilogram, which is higher than standard NCM 811 packs. So I think that collectively that's speaking to those challenges, producing those chemistries, and we're seeing cell suppliers, automakers, pack makers find ways around it to make better use of more stable medium nickel cathodes.
That's interesting, because I remember Umicore last year or the year before talking about 721 sort of being the sweet spot. I think avoiding, the conditions under which you have to make 811, which are quite specific. When you compare, say, those mid and high nickels, versus LFP, are the yields, because it's more established, although there've been some tweaks, is LFP getting higher yield?
Yeah, certainly. LFP is getting higher yield. I don't have a number on hand, but it's certainly nowhere close to that, just about 50% that we're seeing overall for liters in the high nickel space. So that will serve it well. Yeah.
So that's kind of one of the things that I sort of look at when we have the debate or the question around how much hydroxide and how much carbonate goes into battery cells. It's one thing for the finished product, but it's a whole nother thing when you look at the amount of cathode produced and scrappage and whatever else. I have a different number.
Yeah, most definitely. It's something that needs to be considered. We see the same on the rare earth space, where there's a lot of consideration given to the final magnets that go into motors, and not a lot to those yields as you move upstream, which add a whole lot of demand at the mine mouth, where we really need to consider it. With the yield numbers, the total demand metrics that I cited earlier, kind of the doubling of LCE at the mine mouth level versus what goes into cells onto roads. Certainly that's going to improve over time. We don't think the industry is going to settle with 50% yields. It's going to move closer to 80, eventually 90, ultimately higher than 90%. So that will reduce that demand. Also, kind of the blossoming of the recycling industry that we're seeing will help offset some of that. But certainly it has to be taken into account. We don't need just enough lithium to go into perfect cells. We need to factor in all of the losses and challenges.
Yeah, and you're seeing that I did the presentation at Fast Markets in terms of how much cathode is being produced versus how many cells are being produced and then sold and then installed. There's some big inventory differentials there, and I guess it's just something for people need to take notice of that, because when you look at the finished product, I keep seeing reports about how much carbon and hydroxide there is, but they're not looking effectively at what's being produced and the losses that you're talking about. But are you seeing any thrifting initiatives and on the battery metal side that you're aware of that's sort of improving things?
So cobalt continues to be the thrifty of choice, both to address market side factors, but also to boost energy density by increasing nickel. So the examples that we've seen are within that 5 series group, where it's been increased to 55% nickel at the expense of cobalt, which again, combined with cell to pack and eventually vehicle to pack, really pushes that chemistry up to the forefront at the pack level. And then within 8 series, we've seen nickel pushed up to 82, 83% for the same reasons, just to boost yields or to boost performance rather within that series.
And Ryan, in terms of cell to pack, the bandwidth in terms of moving that along the spectrum of the NCM, I mean, how far can you take that? I
think you can take it quite, you mean in terms of performance gains or in terms
So I'm saying, can you apply cell to pack across the entire spectrum of NCM?
Yeah. I don't see any reason why not. I think as long as you can address the thermal issues and the cooling of the pack, yeah, I see no issue with that at all. So what that tells us is that the leg up that it's giving to LFP, 5 series and others today is short-lived if these otherwise, more advanced chemistries can adopt cell to pack and ultimately cell to vehicle. The sky's the limit.
And that's kind of our thesis on why we think that nickel cathode can have its day again, because if you do cell to pack, it then on a cost to performance basis, the pendulum starts to shift again if you can get that up again. So you don't see any hiccups there in time horizon. How long do you think before we see cell to pack or cell to vehicle across?
First, what needs to be addressed are those yields and the challenges making that. Cell to pack is of no benefit if we're still producing 8 series at 50% yields. And if we continue to have those thermal challenges. So I understand that part of the logic for going with even higher nickel with the 82 8 series was also to improve thermal stability. So it's counterintuitive a little bit if we're pulling out cobalt, as everybody knows that's what its purpose is, but apparently that's part of the logic behind it. So perhaps that's a step forward towards having 811 cell to pack or 8 series cell to pack in the not too distant future.
In 2020 and 2021, we've seen COVID play havoc on logistical supply chains, amongst other things. Do you think that high inventories that we've seen in the last while is something that's here to stay across the industry?
These high inventory levels, these challenges, they're here to stay. There's no doubt. Right now, we see this bulk up of inventories upstream with cell suppliers and others. I think that the current bottlenecks that we're seeing have served as a wake-up call to the downstream. So we expect to see a bulk up of captive inventories at that level as soon as they can, and if they can get their hands on it. So inventories, will no doubt be here as this market continues to grow, as it tries to cope with seasonality and volatility throughout the year, whereby 1 month's demand can be double the previous month's. So no doubt inventories are the ideal situation, but again, it presumes that it's available to be stockpiled, and as the future goes on, that reality is going to become less and less realistic.
What is the most important battery trend, in your opinion, that the market isn't correctly factoring in currently? Is there something the market's missing?
I think the biggest blind spot in the battery material supply chain is actually rare earth elements. Often, when looking at EVs and then looking at the market for EV materials, the battery and the motor are treated as separate parts of a non-existent equation, when in fact they're part of one powertrain. And depending what motor you're using and how efficient that motor is, determines how much of that battery you consume, that battery power, to do a unit of work, be it a kilometer or a mile of driving. So not having rare earths and not being able to empower the auto industry with the most efficient motors available means that now their EVs will either go less distance per charge, or they need to boost pack capacity at a significant cost to continue delivering on that driving range that that they've promised to their clientele, that they've built up demand on. So therein, is why rare earths are a major blind spot for the battery materials supply chain. If shortages appear in the not too distant future, which we're projecting they will, and if those impact the auto industry, then that's going to have a ripple effect on the battery side of things. Similarly, if we face battery material shortages in the not too distant future, and suddenly automakers can't crank out as many EVs as they want, then demand for motors falls. So it has a counter effect as well. But they're very intertwined, and that's really, I think, something that's being underappreciated by many.
And Ryan, specifically, are you talking NdPr, or what are you talking there for?
Yeah, certainly. So the motors use what are called neodymium iron boron magnets, within which the main rare earth input is NdPr, also known as didymium. It's a natural combination of two elements, neodymium and praseodymium. So currently, the supply side of the rare earth market is struggling to keep up with demand for that material. And it will increasingly struggle to keep up with the demand going forward, as the demand side is not slowing down. And yet the supply side, can only increase at a realistic rate per annum. So we're soon moving towards a future where, under a conservative scenario, demand for that NdPr, for that didymium, is going to be growing at one Mountain Pass, which is the mine owned by MP Materials, or one Mount Weld mine per annum. So the global market needs to add one of those mines each and every year, increasingly more than that going forward, to keep up with demand in EVs, which is a major, unprecedented feat, one that comes with major lead times and capital investments that we're just not seeing today. So therefore, the gaps are coming unquestionably.
Is there potential for some kind of a concentrate, like a short-term hack, to produce a concentrate and ship to China? Is there spare capacity?
Yeah, they have some spare capacity, and they're currently employing it to process concentrates that they're importing from the US, from Myanmar, and elsewhere. With the US's plans, with MP Materials plans to begin processing its own material, that will liberate some capacity for China to increase its output. But looking forward, we see China continuing to increase output year after year going forward. We see a number of possible and probable producers outside of China coming online, but collectively, it is still not enough to keep up with the 7 to 10% steady demand growth that we're seeing for that NdPr and for those magnets that it goes into.
Typically, a lot of the commodities we've dealt with in the past are GDP-related growth rates. So I think people don't actually understand, when you do 2 to 3 times GDP, what that actually means.
We like to think of the rare earths, and particularly those magnet rare earths. They're kind of the cornerstone of a lot of government initiatives and policies. So they underpin a lot of these targets related to renewable energy. They're essential to meeting targets for EV penetration.
But whenever you hear rare earths, it's mainly electric motors, and it's mainly NdPr, right? So any junior company that you're looking at to produce rare earths, you're looking for the neodymium and praseodymium to go into magnets, just to simplify things for the most part. I know that there's some complexity, but just like in lithium, you're looking for lithium carbonate or hydroxide, or graphite, you're looking to make, coated spherical graphite anodes, that are going to go into the anode. I think graphite is similarly, not well understood, but what you just outlined in terms of the world needing, in MP materials per year is the same dynamic in the graphite market. It's the same dynamic, in the lithium market. You have on this day one, a whole list here, essentially of one producer, MP Materials. And as you were talking, they're currently exporting their concentrate, 100% to China, but they do have a vertical integration strategy to go all the way up to magnets here, at home. Rare earths is often framed, from a national security perspective, not so much from an EV perspective. And reflective of that is you have a U.S. Department of Defense as a keynote speaker, Danielle Miller, because, it has one, it has rare in the name, but it has a lot of these defense applications. But those applications are small in the overall quantum of demand, but they're absolutely critical. But I'll just read through some of these. So you have MP materials and energy fuels, vital metals, commerce resources, search minerals, Hyperion metals. We know very well. Tazo Arima was the founder of Piedmont Lithium, and that's mostly a titanium story, but there's the rare earth kicker there. They have an MOU with Energy Fuels, but this is all of these plays, by the way, are in North America. So again, this is developing a North American supply chain. Innovation metals, rare earth salts, medallion resources, geomega resources, urban mining. I'm going to spend a lot of time on this day of the conference in particular because I don't know a lot of these names, and I'm going to learn a lot. But again, when I wrote this note, you had a forecast. Prices were going to rise. I didn't know there was mixed. CRU is out there, Canaccord. I remember MP Materials put out some forecasts. I think they may have exceeded their forecast. I mean, that stock has performed really well. I'm a shareholder in MP as well as Linus. Based on our conversation, to be honest. So thank you for that. The price have more than doubled over the past 12 months. Has this impacted, automakers' motor choices? And what do you think, pricing is going to do, in the next year and few years?
Surprisingly or not, it hasn't. The doubling of rare earth prices over the past year hasn't impacted automakers' motor choices as of yet, and we don't think it will. In fact, in the face of these price rises that we've seen over the past year, we see examples of companies doubling down and further embracing the use of permanent magnet motors. So an example of that is the Tesla Model S refresh that now only uses permanent magnet motors. Another example is the Mercedes EQS that was just released with a permanent magnet synchronous motor, whereas the other EQ EVs use induction motors. So I think that really speaks to the efficiency gains and the cost benefits at the powertrain level that permanent magnet motors deliver. So we expect that trend is going to continue. Automakers are going to overwhelmingly continue to embrace and adopt permanent magnet motors as long as supplies will allow them to. And there is room for further price increases before it becomes anywhere near economically off-putting to continue using those motor types. Looking forward with prices, we continue to see fundamental reasons for strong rare earth prices going forward, particularly those magnet rare earth prices, where the supply side will increasingly struggle to keep up with demand. So that will put cost pressures on automakers, but Tesla, which is a leader in many fronts, EV wise, it's shown that it can pass those price increases on to its customers without affecting demand. So it's increased prices in China for several models this year to reflect material price increases and manufacturing cost increases with no detriment to demand. So that further speaks to that robustness of demand for the rare earths and the magnets that they go into and the motors that are used in over 90% of all EVs produced today.
But it ultimately, and the Tesla had their AGM yesterday, and they said that they just keep talking about supply chain issues, not just chips, but the reason for the price rises that you just said of their cars is raw material input costs. So lithium, rare earths, nickel prices, at some Tesla has great cars, no impact on demand, but what about other car makers, right? And the urgency to kind of get the cost of EVs closer to internal combustion engine cars. I mean, this is a real issue, absent massive investments in the upstream supply, which also applies to rare earths. What types of motors is the EV industry using? Which ones dominate, and which ones use rare earths?
Three main types, which include induction motors, permanent magnet synchronous motors, and electrically excited synchronous motors. So of those three, only the permanent magnet synchronous motors use rare earth permanent magnets. The other two do not. But the detriment of not using them is that they're less efficient motors, and they're also less power dense. So they're more voluminous and heavier to deliver the same amount of output. So a bit of a side note, what that ultimately means is that it's really challenging for an automaker within kind of a single generation of a model to swap from one motor type to the other, because they have a certain void within that vehicle structure where that motor fits, where it connects to the gearbox, and dropping in a 150 kilowatt motor of a different type that is larger and heavier just doesn't work. It speaks to one of the challenges that automakers face in addressing these supply chain issues going forward. And I think it speaks to why companies, EV makers, VW, a great example, why they're really focusing on modularity and platforms to try to enable some of this plug and play optionality in the future, which can help mitigate against some of these supply challenges, but doesn't necessarily make it a better vehicle.
You're projecting shortages of rare earths for these EV motors. What will the EV industry do?
So by the end of this decade, we're anticipating a gap opening up between supply and demand. Fortunately for the EV industry, for this decade ahead, the magnet market is still very diverse, and EVs remain just a small piece of that demand pie. So what that means is that as shortages open up in the future, we think the magnet industry will continue to focus on satisfying demand from EV makers, wind turbine manufacturers, and others, because they use high performance grades of rare earth magnets that are higher priced products and higher profit margin. And at the other end of the spectrum, electronics manufacturers, loudspeaker manufacturers, headset manufacturers, we expect they'll bear the brunt of shortages as they initially appear in the market. But moving into the next decade, moving beyond 2030, as the gap continues to widen and supply increasingly struggles to keep up with that demand growth, then yes, end users across the spectrum will begin to feel those shortages, and that will push automakers to have to adopt less efficient motor types, at least for a portion of their portfolio, which will either have a ripple effect on the battery materials side of things by pushing up demand, or it will just lower the standards of the EV market in general, whereby performance overall drops across the board. So yet to be seen how that unfolds. Looking beyond 10 years in the EV space is a bit of witchcraft, but we can attempt to, and we can try to kind of think about what's happening.
I remember again last year when I looked at it, MP Materials positioned itself like as an EV play because EVs were hot. The EV market was only 35% of rare earths demand. So what you're basically saying is that that's why there's a fair bit of runway until 2030, because they could switch from some of those other applications to EV. I mean, it is right to position rare earths as an EV themed play, even though it's less than lithium, let's say, which is we're going to 80-90% of the lithium market's going to be EV and energy storage, battery storage generally. Like ESS is not a big driver for rare earths.
It's not. However, what is feeding that ESS can be. So the rare earths go into magnets that go into motors. But when you run a motor in reverse, it becomes a generator, which is on a wind turbine. Whether it's an NCM or an LFP battery sitting in an ESS system, it's going to be powered by solar or by wind. And if it's wind, then it can use permanent magnets in that turbine. In that case, it certainly does bode well for demand on that front. There's many other kind of below the surface end uses that are pushing that demand going forward as well, that they're not as sexy as EVs, obviously, so they don't get the same amount of attention. But one that has an immense demand growth profile going forward, one that's parallel to EVs over the coming years, is the use of those magnets in smart speakers and displays. So things like your Amazon Echo, the speaker part, or the one that comes with the display. Many of those are using speakers within them that have rare earth magnets. There's hundreds of millions of those selling annually, and that market's really exploding. So with a couple, with tens to hundreds of grams per unit, that's just an example of another area where demand is really coming from. But anything else that uses a motor and there's value to be had by energy efficiency, then rare earths become the optimal solution for that as well. So you can think air conditioner inverter motors, you can think washing machine motors, the motor powering your refrigerator compressor. The list goes on and on and on. Anywhere a motor is used and efficiency is key, rare earths become the optimal solution there. So there's many underpinning demand drivers, but EVs are what is going to drive the majority of the market's growth going forward, and why they're characterized rare earths as an EV story.
Got it. So rare earths are, as an investment thematic, magnetic.
And we'll see you on the 19th and the 20th.